Okay, we will begin. So again, welcome to Acumatica training class on foreign currency, hosted today by my name is Dean, Central Nervous Systems. We'll start with our presentation. So in case you are new, just a brief overview of our training classes. We have weekly training classes covering different topics. This week we're looking at foreign currency review, and next week we'll be looking at time and expenses, followed by project quotes. These training classes are available only to our customers, and they can be found at acumaticaengineering.com/acumatica-training. This class and every other is recorded and available to you, so previous classes can be found at acumaticaengineering.com/maintenance-classes. Questions will be answered at the end of the presentation, so please use the question box that's available in the webinar to ask those questions. We'll answer as many as we have time for, and should we not be able to answer a question or have the time for it, we will post a video with those answers on our blog on acumaticaengineering.com/engineering-blog. Okay. So moving on, topic for today, or the agenda, is all based on foreign exchange currency management. So we were looking at currency management. We're going to review configuring currencies, managing currency rates, managing translations, and managing revaluations. So starting off with currency management. Currency management module provides the functionality to use multiple currencies for accounting in the system. It supports foreign currency transactions through the general ledger, AP, AR, and cash management. Foreign currency documents can be found in sales orders, purchase orders, or projects. And you are able in Acumatica to maintain a list of currencies, keep exchange rates up to date, perform revaluations for denominated accounts, and open documents in foreign currencies. So just a quick note, the denominated account reference are accounts that are, those are basically accounts that are in a specific currency, denominated in a specific currency. So there'll be like bank accounts, as well as open documents that might be in foreign currencies. So we're able to perform evaluations for those. Also in Acumatica, you have the ability to maintain automatic calculation of gains and losses resulting from exchange rate fluctuations. With the currency management module, you can translate currencies for reporting in a foreign currency, so consolidation. Let's look at a few examples of how currency management works in Acumatica. I'll head over to my sample company, which is based in US dollars, but for purposes of showing how currency management works, that really doesn't matter. So payables, we'll have a look at our payables. Let's take a look at a vendor here. Let's see what we can do with vendors and currency management. Okay, so AA services, US dollars. If we head over to our financial tab, we have a default currency ID of US dollars, and then we've got this enable currency override checkbox. and in this case, it is checked. So what this means is that I have the ability to, even though AA services default is in US dollars, I have the ability to create bills or create documents against this vendor and override that currency to a different one. So unlike other packages like QuickBooks, where you may have a situation where I have a vendor that I pay in Canadian dollars, but I also have the same vendor that I pay in US dollars. So you have two vendors set up for the same actual vendor. In this case, enabling the currency override allows me to create documents in different currencies for just the one vendor. So multiple currencies are enabled for AA services. Okay. Same type of setup is available for customers. So if I look at AA customer, again, I'm not going to have an AA customer that's in US dollars and an AA customer in Canadian dollars. Here I have the ability to create multi-currency bills and documents to this customer. So let's go have a look at a bill. I've already got one tagged up for us. So okay, what I'll do here is I will make a copy and I'll just paste it. Okay. Something's fresh here, and I will. I'll just save this. Of course, there's an error. Test invoice. Okay. So with this new bill, let's demonstrate how a few things are connected. So we'll have a look here. Okay. So right now, currency, I'm able to switch it to Canadian, Euro, British Pound, Singapore dollar, but it's defaulted in US dollars. If I were to head back into the vendor settings and I had this turned off, and I refresh this page, we see that this currency is now locked in. I don't have the ability to change it. So that's how that setting for both vendors and customers takes place on when creating bills and sales documents. So what I'll do is I'll head back and I'll enable it again. Okay. So if I go back to this, I now have the ability to change it. If I were to change the currency to say Canadian dollars, I get a default exchange rate that pops up, which is based on the spot rate. If rate overrides are available, which is based on the vendor settings as well, I would then be able to further change that rate. So let's go and see how that works. Because maybe we have a set rate that we're going to base that on. And here I can change that. So change it to say 0.78. Okay. So sometimes we want the ability to change that, and that is controlled through the vendor financial tab settings, being able to enable or disable currency overrides, as well as the ability to override the default spot rate that pops up. Okay. So again, the same settings are available with customers. We'll just have a look at that again. We've got that enable currency override to change the currencies, or enable rate override to change that spot rate that defaults. Okay. Another area that we're going to want to look at is banking, because that is where we have our different denominated accounts. So if we look at fund transfers, okay, so we've got a transfer here of funds to the Singapore account. So let's just open that up, and we'll take a copy and paste that. So here, I'm moving money from my US account to my Singapore account. So by the looks of it, $5 million to my Singapore account, which is $6,111,572. So in here, I cannot change the currencies because these accounts are locked in to those currencies. So this 10,300 account is locked into US dollars. That's the denominated account of it. And then the 10,800 account is locked in as SGD. However, when I make these transfers, oops, just save it. I make these transfers. So when I make these transfers, I know when the transfer hits the accounts, I'm usually able to confirm a rate with the bank. And as such, I'm able to go in and ensure that the bank rate on the transfer itself matches what I've been provided. So in this case, maybe I'm provided with a rate of 1.25. And so I could make that change to ensure that that $5 million comes across exactly how I expect it to come across. Okay. From there, we're able to put on things like bank fees and other wire payment fees that might be charged as part of this transaction. So maybe there's a $50 wire fee or a transfer fee. Oops. Oops. Maybe there's a $50 bank fee that we want to apply as well. And so we can make that bank fee hit the books as part of this transaction. Company database is old, so I'm getting these old financial periods here, but we see how this works. Okay. So now that we know how this all works, I'll just delete this, and we can head back into our presentation to look at the next topic. Configuring currencies. So when you first create the company, you specify a base currency. So in my database that I'm showing you, my base currency is set up as US dollars. And from there, we're able to add foreign currencies. So when we add a foreign currency, in this case, we're showing Canadian dollar has been added. We can specify realized gain and loss accounts. We can specify unrealized gain and loss accounts, unrealized gain and loss provisioning accounts. And then we can also put in defaults for revaluation gain and loss, translation gain and loss accounts. So on the consolidation of foreign entities, that would be useful, as well as any rounding gain and loss accounts on that foreign currency exchange. So how that looks like in Acumatica. So we're going into more items here. We're going to look at currency management. Currency management, there it is. And then we're going to open up currencies. So here we've got a number of different default currencies available, 163 to be exact in this version. There may be more now, but we're able to then, we can go through the pages. So there's my Canadian dollars. And I'm able to then see those default accounts the way they were on the presentation. Okay, so in this case, we have this currency set as active and it's used for accounting. Another option might not have that setting. We might not do any business in Belarusian rubles. So it is not active, and therefore no default accounts are set. All right, so let's talk about managing currencies now. So managing currencies, the currency rate type can create any number of custom currency rate types in addition to the default spot rate type. You could use one rate type in bills and invoices and another rate type for the bank account revaluations and yet another type for translations of financial statements. You can create a separate rate type to be assigned to certain customers or vendors to be used in documents created for those customers and vendors. Having this option, there is a monthly cost for those that have a home currency of Canadian. I'm not sure if that's changed, but I believe it is still the case for Canadian home currency. However, what I would say for rate types, unless you have a big foreign currency liabilities that fluctuate rapidly, we would recommend that the monthly rates are used. So if the liability is large and fluctuating, you may want to increase the frequency. Instead of using monthly, you might want to go to weekly or daily. But before we move on, let's look at currency rates. So back in currency management, we could look at currency rates here. Database is quite old, so it defaults to today, but let's have a look at something in 2020. Let's look at October, or let's say December. Okay, so the currency rate entry for Canadian to US dollars, effective 12/1/2020, we had these rates for Euro, British Pound, Singapore dollar, and Canadian. If we were to start changing the dates, we might see some changes. Sorry. January 2021. So we see that those change. Okay. So this is the table of the spot rates. And then on the effective currencies, we have project rates and spot rates, as well as reciprocal rates available as well. So for all projects, for instance, that use or reference this rate type, they're going to get billed at 140. And other documents that are referencing the spot rate will get billed at 1.27 for US to Canadian. Okay. All right, so if I head over to projects, let's go find something. Projects. Let's see if I can find, see if this one works. It's completed, but so we see here that this one is referencing a spot rate. Based on this project, it's looking at spot rate, whereas project rate might be available. Let's see if we can find something that's open. Try this one. So this one here is using a project rate. Again, it's looking at the project rate, which is different than the spot rate. Okay. Okay, let's head back into the presentation. Next slide. So I already spoke about using monthly rates, and but as well with managing currencies, you do have the ability to set up the process of refreshing currency rates by using that open exchange rates API online service, which has that monthly cost. So moving on, managing translations. The operation of restating account balances from one currency, either base or foreign, to any foreign currency configured for use in accounting is called a translation. Okay. So this might be used to report in one currency or another, or one own one currency or another, but you have an environment that has multiple different currencies. Okay. To translate account balances, you first need to perform the necessary configuration in the system and then translate account balances. After each translation, you can review the results in the related ledger of the reporting type. Okay. So if I go to currency management, and I look at translation definition, so let's have a look here. So I may want to create one. Let's just call this a test. So I may want a translation from actual to reporting. And this will be my actual to reporting translation. Okay. And then from there, I can start to add accounts. So I may want to translate my Singapore dollar to US dollars. Okay. Another option would be moving from actual to my EU consolidation, which is also set up here because I've got those European currencies. So, pretty quick topic. This is how we're going to reference those translation of accounts. But just delete that record now. Next topic. So managing those revaluations. Currency rates change over time. You may choose to revalue denominated GL accounts and open documents in the AR and AP at period end for reporting purposes. You can calculate unrealized gains and losses by performing the revaluation of open AR and AP documents created in a foreign currency. You can also calculate gains and losses resulting from the revaluation of denominated cash accounts. As a result of the revaluation process, the system calculates the unrealized gains and losses and creates an auto-reversing revaluation batch. So if we go through this, talk about hitting month end, I have US dollar, euro, and maybe even in this case, Singapore or Canadian bank account. I have transactions made to Canadian, European customers and or vendors. My system has those currencies and allows me to put those documents in as such and subsequently report on them. So let's look at chart of accounts. So here, if I look at currencies, I've got some accounts here that are set to specific currencies. So we saw that Singapore bank account. We've also got a European euros bank account. So when it comes to month end, I want to reflect the exchange rate at month end against these different currency denominated accounts. So when I review things like my balance sheet, I want these I don't want the euros to come across as euro dollars. I want it to come across as US dollars on the reporting. So another key area here might be with AR documents. Even though these AR accounts aren't denoted in a specific currency, we know that the base currency is in US dollars. So any of those documents that are in different currencies, we want coming in and updating the report to show those foreign currency exchanged to my base currency, my home currency of US dollars, based on the month-end rate rather than an average or of the transactions that are being put through. And it will work also for AP accounts as well. So if we head over to AP, we don't see that that's denominated in a specific currency, but we expect those documents to be revalued. So remembering that for my reporting, payables, I have aging multi-currency, coming due multi-currency. These are going to be the reports that we look at to see what is the month-end rate for multi-currency transactions, and we could have a quick look at that too. And we want to make sure that those numbers are what's coming forward on my higher level financial statements. So um, let's just do something really old here. USD. See if I can find something in a different. No dice here for payables, maybe receivables. So we see here with that Caribbean Secretary Online, we've got a euro-denominated AR document that's been revalued to US dollars. And so this is the number that we would expect to see reflected in our financial statements. So again, revaluations become more important in an environment where invoices or payables are beginning to age and there are fluctuations in the exchange rate. So in this example, I'm going back to February, but this document date was January 31st. Perhaps it was paid well in advance of this March 2nd due date, and so it may not have gone through a period of vast fluctuation, but had that, maybe if it's still not paid, it's gone through a series of up and down fluctuations, and we want to be able to report on that accurately and reflect it accurately in our financial statements. And so today it may have a different rate. And so obviously these fluctuations up and down based on what I was expecting at the due date versus now, they've gone with those fluctuations, those unrealized gains and losses due to foreign exchange fluctuation will flow through those accounts that have been designated for those currencies. Okay. Okay. So heading back into my presentation. Today we reviewed currency management. We discussed configuring those currencies and ensuring that whatever other currency you plan to use is activated. We reviewed how to manage currency rates, so using a spot rate, project rates, a specific vendor rate. We have those options and flexibility there. We touched on managing translations, and we reviewed managing revaluations as well. Okay. So again, this class is being recorded and will be available to you at acumatica.com/maintenance-classes. Next week, join us at acumaticaengineering.com/acumatica-training for time and expense review, and followed by project quotes on February 23rd. Let's take a look and see if we have any questions. No questions today. So thanks again for joining us for the foreign currency review class, and have a good day.